We need to talk about NAV erosion and why so many investors are getting it wrong, especially when it comes to these covered called ETFs, these options income ETFs like ULTY. So let's get into it. So we're going to talk about three things in this video. Number one, what NAV erosion is and how it happens. Number two, we're going to answer the question, is ULTY's NAV eroding? And I've got the answer for you. And number three, if you own some of these covered called ETFs and you can't sleep at night and you don't have diamond hands, I'll give you some alternatives that will help you sleep better that still produce income and grow. So let's get into it, guys. We're going to simplify NAV erosion to its base level. So first, net asset value or NAV. What is it? Basically, if you take all the fund's assets, subtract its liabilities and operating costs, you've got the net asset value of the fund. And NAV erosion is when the value of the exchange-traded product's assets gradually shrink over time and the payouts of the distributions come from the NAV itself. So let's walk through an example, and we'll use the Roger Sands High Income ETF, RSHY, ARSHI. Just go with it, guys. Let's say it's worth $100. It's got a NAV of $100, and it wants to pay out $10 per year or 10% yield. To make money, we're selling covered calls. We're using an option strategy. And this year, we write a covered call, and it only makes us $6 this year. But we want to pay out $10 total. So we use the $6 we got from the options income plus $4 from the fund's NAV from its cash to pay out that $10. And to get that $4, we had to sell some of our own stock. So that means after we pay out the $10 distribution, our NAV went from $100 to $96 because we made $6 in options income and we used $4 from our own NAV to pay it back, to pay out the distribution. Think of that $10 payout as $6 from real earnings and $4 recycled from your own investment. That's what makes the value go down, and that's NAV erosion. The NAV eroded, in this case, by $4, not by 10, because 6 of that was income from the options. So the key takeaway is that NAV erosion happens when the fund promises to pay more than it generates in income, and it has to dip into its savings. But NAV erosion is totally different from price decline. Price decline is super simple. That's just when the price goes down. It could be because less confidence in the stock, underlying earnings are bad, whatever reason, the price goes down. And if you combine price decline with regular distributions that pay out from the principal, then you get big time NAV erosion. So why should you care about NAV erosion? Well, there are two main reasons. Number one is it can lead to lower future income, because if the NAV erodes, the fund has less assets, which means it has fewer assets to write options on, meaning lower income. Then you have capital loss. So if you plan to sell the fund later, the NAV is lower than what you paid in, you're going to take a loss there. And hopefully it's not greater than the options income you got. So let's talk now about the elephant in the room, which is ULTY. ULTY's NAV has been going down, but does that mean it's been eroding, or is this just price decline? To answer that, we've got to ask ourselves two questions. Number one, does ULTY promise a fixed payout? My answer to that is no. ULTY's just trying to make a high income however they can. After all, they're called the Ultra Options High Income ETF strategy, whatever it is. Number two, does ULTY use its NAV to pay distributions? My answer is no. ULTY pays its investors money from the income it generates from the option strategies. So the big question is, why has ULTY's price declined so much since its IPO? I don't know for sure, but I've got a few guesses. You can tell me if you think they're far off or if they're on point. Let me know in the comments below. I think some stocks in ULTY have gone down more than others went up. And we'll use an example. Let's say ULTY has 30 stocks and they're all priced at $1 per share. So its NAV is $30. And let's say that 20 of those stocks went down by 50 cents. So you get a $10 loss. And let's say that 10 of those stocks went up by $2. So you get a $20 gain. Normally, that would mean a net profit of $10. So you got your $10 loss from the 20 stocks, your $20 profit from the 10 stocks. nets out to a positive $10. That's how a normal fund would work. The problem is ULTY uses covered calls, which caps the upside. So if those 10 rising stocks went from $1 to $3, that's great, but ULTY probably wrote a covered call that capped the upside at about 50 cents. So once the stock went from $1 to $1.50, that option was exercised. ULTY collects the option's income, but they don't get that upside. So even when some of ULTY's stocks do really well, ULTY's strategy keeps the NAV from going as much as it could. Those are my best guesses. I don't think ULTY is dipping into its actual NAV to pay out a distribution. I don't think they have a fixed amount that they are required to pay. I do think that some of the stocks that they've chosen, which are high volatility stocks, have gone down more than the others have gone up. And the ones that have gone up have had capped upsides. And that's why you see the NAV steadily declining. So at the beginning of the video, I told you guys I'd give you two alternatives to ULTY that have growth and income. Now, it's not as much income, but so far it's been more growth. And those two alternatives are SPYI, which is a covered call ETF that tracks the S&P 500. It's from NEOS. And the other alternative is QQQI. Not to be confused with QQQY. QQQI is also from NEOS. It's a covered call ETF that tracks the NASDAQ 100 and it writes covered calls. Longer topic for another video, but just wanted to give you a teaser of what's out there. Both of those are paying around 12 to 13% in distribution yields right now. And they're going up with the market too, which is great. So what did you think, guys? Is ULTY's NAV really eroding? Are we really seeing NAV decay in ULTY? Or is this just due to the underlying stocks it holds going down more than the other ones going up? Let me know what you think in the comments. If this made you more bullish or bearish on ULTY, are you going to buy, panic sell? And what beer did you drink while you were watching this? All right, see you in the next video.